it's getting even more unpredictable. So even though people are living longer,
Yes.
the unpredictability of when what happens has increased.
Yes.
And I think that's where sort of insurance kicks in, right? To
Yes.
sort of mitigate the unpredictableness.
So don't put yourself in a spot where you don't become eligible at all for a policy. Then for the rest of your life, there's nothing you can do.
Right. Today we've got a very different kind of episode. Instead of diving deep into one company and one stock, we're actually going to be talking about the world of insurance. And we've been joined by a very special guest, Ranjani, who's got a lot of experience, a vast experience in the insurance industry. So maybe you want to start by telling everybody your experience,
Sure, thanks,
your background.
Hi, I'm Ranjani. I have about 13 plus years of experience in the general insurance industry. I've been with the Tata Group, heading their broking for Tamil Nadu and Kerala. And one thing I can say that in the last 13 years, the insurance sector has grown manifold. So many new products come in, and every day is like, unlearning and learning new products. So let's see what we can learn today.
So we'll get right into it, right? And the reason I think we're doing this podcast today, and the reason why we sort of plan to talk about insurance, is purely because when we talk about building a portfolio, right, what everybody assumes is, okay, I need to pick the right stocks, I need to have the right mutual funds, I need to review my portfolio every 6 months. There are certain rules that everybody thinks when it comes to their portfolio, and every sort of decision that a person makes in their portfolio is done from the point of view of wealth generation or building their wealth, right? But what I guess most people don't understand is that lack of insurance can possibly erode your wealth.
Absolutely.
Right? And having insurance is an equally important part of your portfolio, just like picking the right stocks or the right mutual funds or anything else, right? So how do you sort of place your importance on having insurance as part of your portfolio?
Okay. I think insurance and wealth have to be married to each other. That's
Absolutely.
how I would look at it. Because we spend so much time in our life trying to create a wealth. But when you're not insured, and we know the world today, you look at so many untoward incidents, the first thing you're going to touch is your investments.
Correct.
Because it's an untoward incident, so you have to dilute your funds. So yes, marry investments and insurance early. I would say start when you're 18, marry them early, and they will travel, beautifully.
I think a very old statement about the insurance industry is that everything is built on fear, right? And the fact that everybody assumes that nothing bad can ever happen to me. It'll happen to my neighbor, it'll happen to everybody around me, but I'm the chosen lucky one, right? But I'm assuming in your experience, you've seen that is never the case.
Yes. Like you had the Gujarat earthquake, if you remember.
Right.
So the richest of the people became, paupers overnight.
Right.
Or the huge floods we had, the Varda cyclone in Chennai.
Right.
But the sad part is, even after that, there was not so much of an inclination towards insuring oneself. Like you rightly said, people think this won't happen to me. I'm safe, so it won't happen to me. But the whole concept of insurance is to protect you from anything that is untoward that can happen to you. So I would suggest start early, start when you're 18. And probably some of the early insurances you can start with is your life insurance, your health insurance. Because today we find people at the age of 30, 35 becoming diabetic and, probably developing cardiac issues. That is actually, that can pose a problem for you to even get a policy at a later stage.
Right.
So start with your health policy, your personal accident policy.
So let's sort of go back to the beginning, right? That, okay, how does one, firstly, when should one start? You said 18.
Yes.
And I'm assuming you'll probably know this better than me, that data says most people don't even think of insurance until something bad happens or something goes wrong, right? But you're saying, so when usually at 18, most people have just about started earning, or haven't even started earning yet. They're sort of going through their studies or further studies, masters, etc., right? So should a person start, has it got something to do with when you start earning, you should also sort of allocate a certain amount of money to your insurance?
Yes. So when you look at children who are 18, yes, you're rightly saying that they have not started earning. So they can be attached to the parents' policy until the age of 25. Some companies allow till the age of 30. So at least they are covered medically. And the reason being that there is a waiting period of 3 years minimum to start using the policy for any untoward incident. So when you start early, you cross the waiting period. And then when you get into a job, stress sets in, and then you have to start a family. You know for sure that you're covered. There's nothing to worry about. So starting early is predominantly to cross those waiting
periods.
Yes.
So if somebody, if like, I'm sure there's a lot of young people in our audience as well, right? And if somebody who's sort of just started their first job or just starting their career,
Yeah.
what different types of insurance policies should be a part of their insurance portfolio, if you may call it that?
Okay, so definitely term life insurance, first thing. And medical, as I said, health
Right.
insurance, because when they are young, they are very healthy.
Correct.
And today, you'd be surprised to know that insurance companies offer discounts. If you are having a certain fitness regime, you're, maintaining your BMI well.
Right.
And we see a lot of youngsters opting to, getting healthy these days.
Correct.
So you get discounts, you get additional vouchers, which is very, very,
It's another motivation
motivating.
to
Absolutely.
be fit.
Yeah, and you can boast that I am fit, I pay lesser premium than you.
Right. Right.
And so these are very nice initiatives, and insurance companies are giving you free health coupons
Right.
to do your master health checkup. So lot of things possible. It's just that you have to open your eyes and look at them. And of course, personal accident, because today, especially in the south, we are known for two-wheeler accident prone regions. So just to be safe, you might be an amazing driver,
Right.
very safe, but just to be on the
Everybody
safe side.
thinks they're the
Yes.
best driver in the
Absolutely,
world
absolutely.
until something bad happens.
Absolutely.
And I'm assuming when it comes to personal accident, not always doesn't necessarily need to be your fault. You could be the best driver.
Yes, and
but
with
something bad could happen to you while you're driving on the road.
Yes, and with personal accident, I would like to stress earlier the concept of personal accident would be a road accident or a rail accident.
Right.
Today, a lot of people are going into adventure sports, trekking.
Correct.
Something untoward happens there.
Right.
We've heard of incidents where some big shots have had incidents paragliding
Right.
or
Right.
bungee jumping.
Correct.
So even at an amusement park, for that matter.
Right.
So even these can be very easily covered under your personal. And personal accident is a policy which comes default with your motor vehicle, but you can have n number of personal accident policies.
Correct. Correct.
For example, we have State Bank of India. You pay $2,000 or you get a cover for 40 lakhs. If you're
Understood.
a SBI account holder.
Yeah.
So that's a very, very small amount for a
Right.
40 lakh.
Correct. Correct.
And what the youngsters need to also think of, today parents are investing a lot in their education. So there
Right.
are liabilities on the parents as well. So something untoward happens, the money will definitely help the family to recover from it.
Correct. Absolutely.
liabilities.
Absolutely. So fair enough, right? So you've got to obviously start picking out your policies when you're young.
Right.
The younger, the better, and you sort of get through your waiting period quickly.
Yes.
But I'm assuming your requirements change,
Absolutely.
right? As you grow older, so when you're, let's say, in your early 20s, your chances of health issues, etc., happening are much lesser. But as you grow older, obviously health problems kick in. Now that
Right.
could be mental health, that could be physical health.
Absolutely.
Then you sort of get married, you have a family. So then there's obviously a lot more responsibility. Then you want to probably start thinking about your kids.
Right.
And I'm assuming there is I'm sure you probably have a strategy that you would suggest to your clients that, as you go through different phases of life, how do you sort of modify your policies?
Absolutely. This is just like your investments. Like
Right.
when you're investing money, you keep reviewing your portfolio to see what modifications you can bring.
Absolutely.
Because you are probably 5 years into your career, you're making more money. So you have a wealth consultant to do
Right.
that with you. So similar with your insurance, when you start young, you feel, okay, I'll have a probably 3 lakh cover, 5 lakh
Right.
cover. And then you step into 25, 30, and then you start a family.
Right.
You have more responsibility. So keep reviewing your policies to see whether you're adequately insured. So today
Right.
in India, the statistics say people are insured, but largely underinsured.
Right.
So keep reviewing your policy, and you will pay a very, very small difference in sum for a bigger coverage.
Right.
So when you review that, you also get into a practice of understanding what is happening, what are the current updates, what are
Correct.
the new, like I said, these vouchers and discounts you get.
Right.
These you will get to know when you start talking
I'm
to
also
your-
assuming, right? I'm just taking a random example that
Oh, yeah.
if I get a policy, let's say 10 years ago, and my cover was, let's say, 5 lakhs, right?
Right.
And 10 years ago, 5 lakhs feels like, oh, it can cover all my medical expenses.
Absolutely.
But today, in a probably a good hospital, 5 lakhs is nothing.
Absolutely.
Right? And it's obviously not enough. So I'm assuming the inflation also plays a
Yes.
huge role in terms
Yes.
of reviewing your policies
Yes.
and the cover that you have at your disposal.
So if you see in the last 7 years, medical costs have risen almost 3 times.
Right.
And especially post-COVID, costs have gone really high. And also the mortality rate has increased in the
Right.
sense people are living longer with ailments,
Correct.
and there is a lot of medical expenses
Expenses
incurred.
that come on to
So
it.
you have to keep looking at, I would probably suggest start with 10 lakhs.
Okay.
5 lakhs was the norm earlier.
Right.
Start with a 10 lakh sum insured,
Right.
and you can go for a top up with the minimum 25 lakhs. So how a
Understood.
top up works is it has a minimum deductible. Let's
Right.
say 5 lakhs is a deductible, which is covered under your base
Right.
policy. But you know for sure I have a 10 plus 25. So 35 lakhs is a very, very comfortable
Understood.
place to
Understood.
start.
So, okay, now, like when it comes to investments, right? We always sort of tell people that your risk appetite changes as you grow older in life, right? And for example, if when we review all of these portfolios, when we always sort of try to judge a person's risk appetite and see that, okay, a younger person, slightly higher risk appetite, can take a little more risks.
Right.
And as you get sort of older and as you go through life and the responsibilities and everything around you increases, that's when you sort of want to play it safe and allocate a smaller percentage to risky assets, right? And that's how you change. So is this a similar strategy when it comes to insurance as well?
No, see, in insurance, since you start early, you are probably going into a risk zone when you cross your 35, 40. But like I said, when you cross those first 4 years and you have adequate insurance, there's nothing to worry about because everything is covered. Like I said, when you review, you cross 35, 40, you can look at a lot of riders available in the market today. Look at including a critical illness cover. So a lot of people have this fear that my family has a history of diabetes, my family has a history of cancer.
Right.
Take a critical illness rider. Again, a small premium you'd pay, but you know you're safe.
Correct.
Because critical illness can actually devour all your investments.
Right. And it obviously puts a lot of burden onto you and everybody within the family, everybody within your circle, right?
Yes.
Now, you mentioned something which is very fascinating, that most Indians are underinsured.
Yes.
Right? So how do you, and again, I feel it sort of stems from that thought ki nothing bad will happen to me.
Absolutely.
Array, 2 lakhs is enough, 3 lakhs is enough, right? What's the worst that could happen? And we always sort of, it's a whatever, there's a fallacy, right? That you always assume that something bad, or how bad can things get?
Absolutely.
Right? And that's probably where the underinsuring, the fact that people are so underinsured, that's where it stems from, maybe.
Yes. And also, well, I would put it this way, it's penny wise, pound foolish.
Right.
So, we think about why should I give so much for a medical premium? I'm hale and healthy.
Right.
And some people even fear getting a medical test done because agar kuch nikal gaya, what if something comes out of it?
I mean,
I don't want to know.
Yeah.
The longer I don't know, the better.
Right.
In fact, I have a classic example of one of my colleagues in my previous organization who, succumbed to COVID. It was just about 35, 36 from a remote village in the south. So the wife was left behind with 2 little children, and she was not having much knowledge of, no exposure to the outside world. And as a classic middle class family, he had a lot of liabilities, home loan.
Right. All got passed on to the rest of the family.
And she was absolutely clueless. But being a part of a large corporate, there was a certain amount covered for that.
Right.
But that is not a privilege for everybody.
Yeah, absolutely.
So, you have to look at what if I'm not going to be there tomorrow is a very, very essential question.
Correct.
Because everybody is on liabilities today.
Absolutely, yeah. And so how do you, so when you're picking out a policy, right? And as we said that we always assume that the worst can never happen to me until it happens to you.
Yes.
So how do you ensure that when you're sort of picking out a policy and when you're deciding how much cover to get, etc., how do you ensure that it's adequate? Like, how do you sort of define the term adequate in insurance?
Excellent question. See, insurance companies have a very clear underwriting concept. They will look at your BMI.
Okay.
At the time of taking a policy, if you are overweight, they will clearly reject you.
Right.
So that's a clear sign. Today, India is probably becoming the obesity capital of the world.
Yeah.
So that itself should be an alarm for you.
Right.
If your BMI and if you're probably overweight is 5 kgs above your ideal weight.
Correct.
Obesity is much
higher.
Larger.
Yeah.
So if you're conscious of that, then you can point blank say you are at a risk for any disease.
Correct.
Because today diabetes is a lifestyle disease.
Right.
Major cause for cancer is stress.
Right.
Science and research says. And today everybody is under stress.
Absolutely.
So you can be rest assured that you are going into that path maybe a little later than somebody else. That's
right.
So if you're not maintaining your ideal weight, please go ahead and take a huge insurance. And of course, start working towards improving your life.
Right. But so, when we're talking about the adequacy of insurance here, you're talking about medical cover or health cover, right?
Yeah.
But let's say if you had to look at different types of insurance, you have your asset insurance, you have your motor insurance, any sort of insurance depending on the life situation you are in at that point. How do you sort of predict that this is enough or this is adequate?
See, like I said, start with the 10 lakhs. Okay. And depending again on your liabilities, if you're going to buy more assets, if you have more than one car, how much of the liability are you increasing? as per that, increase your sum insured of your insurance as well.
Fair
That's
enough.
how I
Fair
would
enough.
put it.
Makes sense, right? So let's look at it from the other side, right? That what are the challenges or what are the really difficult situations somebody could put themselves in if they are underinsured and the bad thing that was never supposed to happen actually ends up happening?
Okay. So, which is again the rising healthcare cost.
Right.
Okay. Like during COVID, what we saw was a bed per day
Right.
costed anywhere between 60,000 to a lakh.
Correct.
Which is completely, you are
It's
not prepared for
nonsensical.
something like that. You're not prepared for something like that. And then you look at where you can borrow and what gold you can pledge, sell. So you get into a frantic mode, and
Right.
it is one instance which is going to deplete all of what you have taken years to accumulate.
Correct.
So I think from that perspective, you have to be prepared that anything can happen, and go ahead and
Prepare as much as you possibly can.
and keep reviewing. See, the reviewing, and this is where an expert advisor comes in, like how you have wealth advisors, wealth consultants.
Right.
See, because we take these things seriously because there's money involved.
Right.
Like you are getting into a loan with a bank. There's a lot of legality. You
Correct.
read it 10 times. You
Right.
ask for so many opinions. But sadly, insurance being a contract by law is not looked at. So what I would say is very basic thing. Look at your policy period, expiry. And then look at all the coverages.
Right.
Is it adequate? Like if I'm newly married, I have to see whether I can include a maternity cover, because a maternity has a 2-year waiting period.
Right. Right.
So nowadays people plan. They wait
Correct.
for 2 years to
Correct.
start a family.
Right.
So it's ideal that you get married, take a maternity plan. So in 2 years that gets covered, because maternity today is an expensive affair, because a lot of things untoward happen today.
Right.
Complications,
Correct.
C-sections, whatever. So planning your insurance is as important, because
Right.
like I said, they are married, insurance and investment.
Absolutely.
So start looking at those kind of aspects. Or if you travel a lot, okay, then again you are more at a risk of exposing yourself
Right.
to danger.
Things going wrong, etc.
Yeah, because these are beyond your
And
control.
again, if you're in a alien country and something
Absolutely.
goes wrong, the expenses can literally go through the roof.
Absolutely. How many of us see in this country, unless it's mandated, like if you have to travel to another country, travel insurance is mandatory.
Yeah.
Then I take it.
Correct.
If it's not mandatory, I would probably not take it. So when it is mandated, you really go for
Right,
it. So
right.
insurance, in fact, the lovely thing about medical insurance, there is something called a free look period.
Okay.
So the moment I get my insurance, I have a 15 days period
Okay.
to go back to insurer and say, I'm not happy with this policy. This is
Okay.
not what we agreed. For which you need to learn to read the
Read
policy.
the fine print, I'm
Fine
assuming.
print.
Yeah, because
And definitely look at the exclusions.
Right.
When you take a policy, if you think like, no, 4-5 pages of legal document I can't read,
Right.
go to the exclusions part,
Right.
see what is not covered. Because I
Correct.
recently had a client, she had a policy for 3 years.
Right.
The insurance company verbally told her that maternity is included.
Right.
Now she's planning a family next year.
Correct.
And unko jhatka laga, she was told no, maternity is
It's
not
not
covered.
included.
Because it's not in written. It was over a telecon.
So she can't even go back to the insurance company and be like,
Yes.
yeah, you told me this. There's no record of it.
Yeah, and today a lot of people are going to web aggregators. You don't know what you're signing up for. So
Right.
I'm not saying they're wrong,
Right.
but learn to read everywhere.
Correct,
Learn,
correct.
even when you're going through a web aggregator, learn to read the blueprint.
I think the common mindset with most purchases in India is, I've realized one thing, right? Having a sort of background in marketing, that an average Indian consumer has no concept of loyalty.
Yes.
Right? Wherever I can get the best deal, I will go there.
Yes.
So essentially, what as a byproduct of this, what ends up happening is when people are going like, okay, you know what, I need to get my car insurance renewed. You sort of go to a third party app or an aggregator or whatever, go through that list, whoever's giving the biggest discount or whichever looks like the best deal, click.
Yes.
And buy it without ever reading what it actually comprises of.
See, no matter how much there is advancement in technology, Sid, there is a human intervention required. And we
Absolutely.
see this in our experience when there is a claim.
Right.
When you have an expert advisor, like they used to just come to us, we used to take care of the entire claim process.
Right.
Now, when you're going through an unknown source, when you're going through something online because it is cheap, look at the amount of hassle you have to go through.
Right.
There is so much documentation, you have to go places, and you know how it is to call a call center.
Yeah,
Your
yeah,
line
yeah.
gets cut, another person comes, and then you do the whole
Yeah, no, you have to
conversation
explain the
again.
whole thing again.
So
Yeah.
people don't have time for it today.
Correct,
So it's
correct.
very, very sensible to go to an advisor who is with you through the journey.
Right.
Because
Absolutely correct.
And they will keep telling you what is new in the market.
And I feel, you made a very solid point, right? That when it comes to your investments, your wealth management, going to an advisor is pretty common, right? I think most people, most families have advisors or have somebody, have a professional basically guiding them through the thing, right? And I think people are more comfortable with it because people look at investments as I'm growing my wealth. Even though I'm paying X amount as an SIP for a mutual fund, it's going to grow. With an insurance, I feel the mindset is that it is an expense.
Absolutely,
right?
You nailed it.
Right, and I'm assuming that's the mindset, the common mindset at least. So how does that change?
It should happen to you for you to change.
Something bad should happen to you.
Actually, I'm. It's a very good question, and I'm thankful that the government is also having a lot of insurance schemes now, which are very, very friendly, very pocket friendly. I would say. I think you can get a personal accident at less than 200 a year. And a health policy at about less than 500 a year. So government has come out with so many schemes, and there is senior citizens, who get a certain amount of money for health privileges. So everything is available. You have to just click and opt for it.
Correct. So now, I mean, one last thing, right? Before I want to actually sort of ask you, how do you what are the policies you should have and everything? But before we maybe get into that, one last thing that I'm just purely out of curiosity, right? That you deal with so many clients and you sort of manage the insurance, advise them on which policies, etc., etc. So if you can maybe share an example, obviously without names, but share an example of somebody who, like, how do you go about strategizing somebody's insurance portfolio?
Okay, so we try to, when it comes to life insurance, we try to understand what the individual's life goals is. So today the trend is people want to retire early. They want to retire, let's say by 45, 50, and then become an entrepreneur. Right? So we advise them to take an insurance cover, depending on how their lifestyle would be at the age of 45, and ideally a minimum of 10 times your current CTC is what a minimum, giving you a threshold.
So you're saying the retirement fund that I need is 10 times of my current CTC?
Yes, 10 times, because the inflation is going to be there.
Of course.
And you want to lead a comfortable life. And when you want to retire early, it's easier for people to pay higher premiums because it'll put you on a shorter tenure, make you pay higher premiums because you have the earning capacity now. So by 45, you've paid all your premiums, and then the insurance is going to pay you back. Correct. So you're very sorted that way.
So that becomes a sort of an income while you're enjoying your retirement.
Your money is earning something for you and keeping you secure.
Correct.
Right? And for health, similarly, every 5 years, we would say, like I said, start with the 10 lakhs. Every 5 years, I would say double it. Because today, a lot of policies give you a restoration benefit. I have 10 lakhs, I use 10 lakhs, again 10 lakhs comes back to me. So it's there. But every 5 years, make your 10, 20. Make your 20. Go up to 50, I would say. You don't have to go beyond that. But a 50 lakh cover with a top up of 1 crore. You are really comfortable in that space.
Fair enough.
And today, another misconception, I put it, people have this thing that my company is covering me for my medical. I'm taken care of. Now again, let me come to this point. You want to retire early, right? So at 45, when you want to retire, what are you going to do then? Because you're not going to have a medical cover. So I always advise, keep one medical cover running parallelly with your company's medical cover. Because again, remember the 3-4 year waiting period, you're crossing that. So even if I were to leave the company, that could be a personal issue. I'm working in another state in a big corporate. There's a personal pressing problem at home. I have to come back. Then I'm also without a medical cover. Second thing is, if attrition today, we're looking at large companies who have gone into attrition. So suddenly you're losing your job. And then the first thing is stress sets in, you're going to fall sick, and then you don't have a medical cover. So never be in a phase where you don't have a medical cover. Like I worked with Tatas, everything is covered medically. But from day one, I had my own parallel medical cover. So today I'm covered for a basic policy of 20 lakhs and I have a 1 crore 20 lakh top up. And I've crossed all the waiting periods. Right? So especially when you're crossing 40, 45, today the general insurance market does a master health checkup to give you a policy. You have to cross all those minimum thresholds to show you're healthy. Otherwise, you can outright be rejected.
Fair enough.
Let me say, people today are developing diabetes from the age of 20.
And you read about this, right? Where it's getting even more unpredictable. So even though people are living longer, the unpredictability of when what happens has increased. And I think that's where sort of insurance kicks in, right? To sort of mitigate the unpredictableness.
So don't put yourself in a spot where you don't become eligible at all for a policy. Then for the rest of your life, there's nothing you can do.
Fair enough. I think thank you so much. Maybe last closing points if you can tell everybody.
Yeah.
Just a short list of things that you should look for when you're sort of picking out a policy.
Okay.
What are the things you should look for?
Yeah. First, look at the credibility of the company. It's available on Google. Just go and look at the claims, history of the company. It's all available on Google because IRDA is the governing
Right.
body. So look at the top companies who've done very well. Their claim ratio, their solvency ratio should be very good. Google it and look up for it, or go to an advisor and stick to the known brands. Don't go to newcomers who are tempting you with higher discounts because they are also new in the market.
Right.
And once they burn their fingers, they're going to withdraw.
Right.
And one point which you touched was very, very appropriate, Sid, where you said people are continuously changing the insurance companies because the premiums are low.
Correct.
Now, you have to understand the other side of the coin. When an insurance company looks at your proposal and see that every year you're changing a policy, you are not a preferred client for him.
Right. Because
He will
they want
reject
you.
you.
Yeah, of course.
Because he will want to see, because a lot of people who use this to claim. I claim in one company, I switch, then I claim.
Right.
So you're not a good customer.
Right.
If you look at a taxi ride you take today,
Right.
you have a rating from the driver.
Correct. Absolutely.
As to how you behave. It's a similar thing in the insurance industry. So don't do this hopping. Choose a good reputed company. There are so many of them who have established themselves very well. I don't want to name them.
Right.
So go for them, even if, and see, something, the best always comes with a small price tag.
Right.
It's okay to give that premium.
Correct.
Your claims have to be taken care of.
Fair enough. I think that's all for today. I think the summary here is that we all believe nothing bad can happen to us, but usually it always does. So be safe, keep yourselves insured, and if you all have any questions, please put them down in the comments, and we'll get Ranjani to answer them. Thank you so much for this week.
Thank you.
Disclaimer: this content is for informational purposes only. None of the stocks, brands, or products mentioned are recommendations or endorsements.